The broadcast is now starting. All attendees are in listen-only mode.
All right, good afternoon, everyone. My name is Bobby Rains. This is our once every 3 weeks members-only workshop for Investors Observer. Glad you're all here today. With that, let's hit the agenda. First, we're going to do our normal market update kind of stuff and talk about what's going on at Investors Observer. And then the rest of the session will be essentially up to you. Questions, site demonstrations, anything that those of you who are hearing my voice right now are interested in hearing me talk about, we can do that. As always, we didn't get any this time. We have in the past gotten some. If you have a question that's you think would be good, broken out into slides, in one of these sort of sessions, I'm more than happy to do that. Just send it to us ahead of time and mention webinar, and we'll get that up and running for you. All right, so let's get into the market update. This is 2 years of one-day candles for the S&P 500. You can see here we got back above the 200-day moving average yesterday and today. So that's a positive. We're still in an area here. You can see a lot of highs and lows from last spring and then in the fall here. So we're still in an area where we'd expect to see some support and resistance on the way back up to old highs. Obviously, as you pass these levels, they hopefully become support to the downside, but there are still some, especially in sort of this 2,800 level is the next, looks like big batch, but I think there's some other levels in here that could be resistance there as well. We do a pretty decent chart study in our Friday sort of weekly market wrap-up blog post. You can find that on the website. It also gets emailed to some of you probably in the Market Intelligence Center newsletters on Saturday mornings. But yeah, there's usually a pretty good chart study in there if you're interested in this kind of stuff in between workshops. All right, and then this is a 6-month comparison of the S&P and the NASDAQ. You can see over this period, the S&P has outperformed the NASDAQ by a couple of percentage points. A lot of this due to the fact that the NASDAQ just went down so much faster than the S&P back in the fourth quarter, but it certainly hasn't bounced back with the same ferocity it went down. And we'll talk about a little bit of that on the next slide, actually. But yeah, I just wanted to throw this in to give you an idea. The NASDAQ has been sort of the leader in terms of indices pretty much throughout the rally, so it's a little bit interesting to see it lagging now. All right, so here is the NASDAQ. You can see it hasn't bounced back quite as strong as it did last year. This was the last spring when things sold off, and we came back and set new highs. We set new highs almost immediately here, and then went on to set several more new highs. And we just haven't come back quite that strong. Obviously, we went down a lot harder. We still haven't retaken the 200-day moving average even on the NASDAQ, and some of that's actually fundamental. NVIDIA is the last of the FANG stocks to report. They're going to come out after the bell today. And a lot of the FANG names have some weakness. Facebook has its problems that are pretty well documented. Google has some, the cost of ads just keeps getting cheaper and cheaper. Apple is trying to change its business model, essentially. They can't sell iPhones as fast as they used to, so they're trying to transition to services. So all of those things are sort of slowing stuff down. And then, the rest of the NASDAQ, there's a lot of semiconductor stocks and a few others, but semiconductors are a big one that have been sort of seen slowing demand from China, which is, a giant market. So it's not too surprising to see somebody with a lot of business in China maybe not recover from that kind of a sell-off quite so quickly. All right, so what else is going on? Earnings season, we are sort of into the tail end of that now. It hasn't been super exciting, but I think that's kind of good. The reactions have been what I would describe as reasonable. We haven't seen a lot of people trying to, we haven't seen the entire market sort of develop a grand unified theory of the economy off of one earnings report and then try to do the same thing in the opposite direction the next day. We had some earnings reports in 2017. It seems like it didn't really matter what you said in your earnings report. You were just going to go up. As long as there's anything mildly positive in there, stocks went up. And then in 2018, a couple of reporting periods, it was kind of the opposite. If there was anything negative, your stock was going to go down. And here we've seen, things seem to be getting taken on a more case-by-case basis. So that's interesting and probably a sign of a healthier market, although not one that's just going up all the time every day. So it's not as good a market for making money, but it's maybe healthier over the longer term. Guidance has been soft. Analysts are currently predicting an earnings decline in the first quarter and low single-digit growth for the second and third quarters of this year. That's obviously not great. I've started to hear the words earnings recession tied to each other. I don't know that there's a good definition for that. Presumably, if you extrapolate from the regular definition of recession, it would mean 2 consecutive quarters of negative growth, or 2 consecutive quarters of earnings decline. That isn't actually the forecast right now, but it seems more possible than it did, say, a couple months ago. It may or may not happen. It suggests there isn't a lot of upside to the market on that front in any case. So there are obviously some things we'll talk about in the rest of the slide that may change some of that. But yeah, some things will go up and some things won't. It turns out that maybe just not everything will go up. Certainly, it doesn't mean that everybody's earnings are going to decline for 2 consecutive quarters. It's just the some of your bigger companies. So yeah, we still have trade stuff going on. China negotiations are supposed to pick up tomorrow and Friday again. It seems very much at this point, they've had several rounds of talks. Nobody seems to be super angry about it. We haven't gotten any specifics announced yet either, which is, I don't know, maybe how these things should be done. Maybe it's because nobody's agreed to anything specific. The March deadline seems to be pretty much entirely at the whim of the president at this point. It was a thing that they agreed to push back, and it was March 1, and we were going to enact new tariffs on March 1, and now he's said that if he likes how the talks are going and thinks they've made progress by some metric, he could suspend it for a while or indefinitely. So it seems like the March 1 deadline is much less of a deadline than it maybe did a few weeks ago. But again, who knows? It's really hard to know exactly how that's going to shake down. It seems probably like we're going to not have another government shutdown, although Congress hasn't voted yet and nobody's actually signed the funding bill. So those are the things that are prerequisites for not having a government shutdown. But generally, it seems like we probably won't, and my guess is if we do, it won't last as long as the last one. And then, the Federal Reserve had been a big source of concern, specifically interest rates, but not just interest rates. But the market seems to have liked what it heard from Jay Powell the last few times it's heard from him. So that's sort of a change. And then, Brexit just keeps getting closer, and nobody really seems to be willing to make a deal there. It's very hard to know exactly what the effect on the U.S. economy there is, but it does seem like, it seems like there'll be some deal. Currently, we have trade deals with the EU, and with which Britain is a member. And then after Britain leaves the EU, presumably we would need new trade deals, and I don't think anybody really knows what terms those would be on. So it's hard to plan if you're running a business, especially an importing or exporting business. What prices you'll have to pay for things, or what prices your customer will have to pay for things without knowing that. That's the same problem with the China tariffs, is nobody seems to know what things will cost that are coming from China after March the 1st. It might be what they cost now. It might be plus, a 25% tariff instead of a 10% tariff. They could make a deal and all the tariffs would go away. They could make a deal and it would be a different tariff rates on certain things. It's essentially impossible to know, which makes it very difficult to plan. All of that could eliminate some of the, if we got well, depending on your definition of good, I suppose. Certain trade talk outcomes could eliminate some of this earnings recession talk, I think. And certain outcomes, even certain outcomes that involve a deal, would not eliminate that. So again, it's really hard to know exactly how all of those pieces are going to fit together. So that's my market update for this time around. We do have some things going on in Investors Observer. We're pretty excited about all of them. We're hoping to launch them a little bit later this year. We don't have a launch date picked out just yet, but we are excited about it, and I think it's going to be good for everybody, and it should should make a better product and hopefully better investing outcomes for everybody, which is really the goal here. So with that, I am going to start taking questions. Any questions anybody has, put them in the box and we can try to get them answered. Yeah, so while we're waiting for questions, I will note that we have tried to resume putting portfolio trades out. We took it didn't seem warranted by market conditions for a good chunk of the fourth quarter of last year to put out trades, and we were cautious getting back in so far this year, but we're trying to put some trades back out slowly. We're picking our spots and trying to put some things out, but we are doing that. We still have a couple left over from late last year that are in not the best shape, but we're hoping to get some of those cleaned up relatively soon. Garmin is on my list to address before the end of the week, and I think we have Nav and Play that we're going to be looking at as well. Okay, so Daniel says, what is the status of the recent beta? So Daniel, yeah, I don't remember offhand if you're a member of the beta test group, but we did have a beta test for some part of our new software that we're working on, and we will hopefully be maybe adding features to that as we get closer to the launch of our new stuff here. I'm not sure exactly what the plan for that is exactly, but it does seem like we got made some progress on some stuff there. If there's more feedback about that product that you're interested in giving us, there's a form you can fill out, I believe, on that page or some way to get to it. And then also, you could just send us an email or give us a call also if you wanted to talk about that more. So Ron has a question. He says, do we put out strategies that are specific to market conditions and or our market calls? I mean, to the extent that we put out strategies that we think are likely to succeed more than some other strategies we could put out, yes. We're not, I mean, the trade idea generator tries to find as many trades as possible on as many stocks as we can every day. That's sort of a use it as you see fit sort of tool. But in terms of portfolios and some things like that, we're certainly trying very hard to put trades in front of people that we think have a high likelihood of success. So in that regard, yes. I don't know that I really think of myself or anyone here as somebody who makes a market call. I don't have a price target for anything really. I try to know, try to have some idea of sort of what the weather is and plan accordingly, if that makes sense. But I don't have I'm not in the business of making predictions. I'm more like to think of myself as being in the business of trying to find trades that will be successful. I'm not sure exactly what you mean by that, Ron. He says the trades seem to be generic to market perspective. I'm not 100% sure what you mean by that. We try to find things that seem like they'll work. We have an ability to go short in some of our strategies. Covered calls obviously isn't a strategy where we can go short, but we have gone short in diagonal spreads and vertical spreads from time to time. We use stocks from different sectors to try to find what's working and use things as appropriate in that regard. Past that, I don't really know how to answer your question. All right, so we don't have a ton of questions coming in. I don't necessarily want to ask anybody to sit here for an hour. I'm happy to take questions for as long as people have them, but if nobody has a question, then we can go ahead and wrap things up. But here we'll put a recording and link to the slides as always up tomorrow, and I think an email goes out with that as well. But it's findable in the Market Intelligence Center section of the website. At some point, probably mid-morning tomorrow is usually about the time we get it up there. So I'll be up there tomorrow. Be on the lookout for more portfolio trades coming out, possibly later this week. Certainly, probably more next week. And other than that, feel free to get in touch in between these sessions if you have any sort of questions or concerns. Thank you for coming.